PowerPoint ke nampak Excel tadi?
PowerPoint.
PowerPoint, okay, good. Alright. Let's go back to the format. Alright, format. I hope everyone has actually go through this recorded lecture so that you at least can understand some of that. Okay. In order to do tax computation for business, we have two approaches. Okay, we can start from gross business income, which is the common income, where you start from gross and then you minus all deductible expenses, all right, or anything that can be deducted. Therefore, you derive to adjusted income. Okay, so we can use this approach for business income. However, in real practice, okay, real life, in the common practice, we would normally apply the second approach, okay, which is this one. All right, you will start with the profit or loss before tax, then we plus any non-deductible expenses, then we minus any double deductions or anything that need to be deducted. Okay, so for that, you have to follow this format. Okay, you have to follow this format. Okay, first thing, when you have business tax computation, one thing that you have to know is that, are you doing for enterprise or partnership, which is for individual taxpayer, or are you doing for Sendirian Berhad, which is a corporate taxpayer? Okay, so you have to be careful which one is which, because there are some that you have to be careful, especially when you know that you are doing for enterprise. Therefore, you would expect a lot of business personal expenses that will be added back. Okay, because it's very common in real life for enterprise, even private or domestic expenses also being incurred by the business or borne by the business. Okay, so these are the format that we will do. So for today, we will do up until adjusted business income only. So for the next class, we're still going to do exercises for business income. However, I will also include up to statutory business income. Okay, up to statutory business income. Okay, so these are the format that you have to be familiar with when we talk about section 4A business income. Okay, let's move on to the question. Okay, the question, Puan Jiha, Mama's Kitchen. Is it Sendirian Berhad or is it enterprise?
Enterprise.
Enterprise. Okay, what is the most, how do I say? Why you need to know, okay, enterprise, and how does would have impact your calculation? Okay, so because when it is enterprise, will be assessed based on individual basis. Okay, therefore year end must be 31st December. Okay, why 31st December?
Calendar year.
Why calendar year? Because it is an individual taxpayer. Okay, so that's why you have to know you are talking about business income for individual or corporate taxpayer. Okay, all right, so for individual business income for individual business must end on 31st December because they follow calendar year for individual taxpayer. Okay, that's why they are normally for assessment 2019, the latest or the due date of submission will be normally on the 30th June 2020. Okay. So what do we do? Okay, of course, when you have question on business income, you would have SOCI. Okay, and then in the SOCI, you would have note. Okay, another column on the note. So this note is actually would explain what are the things that you need to take consider in order to do your adjustment. Okay, so normally these are all the additional information that you need to decide either need to be adjusted or not to be adjusted. Okay, so let's the format is still the same. Let's compute for year of assessment 2019. This will be Mama's kitchen. So section 4A, business income. Okay, so we will start with profit before taxation. Okay, why actually we start with profit before taxation? Any idea? Why in practice we start with profit before tax?
Because it is
In
given.
reality, because that's what given.
Yes.
Kenapa? Kenapa profit before tax?
Because we want to calculate the tax.
You want to calculate the tax. Okay. Okay, so when you go for practical training next year, kan? You all go. Is everyone go for practical training next year? Okay, you might be seconded to tax department, right? So this profit before tax, this is actually an audited figure. Okay, the account normally must complete the auditing. Okay, it has been audited. Once it has completed the audit, that has been signed and so on, then only it will be passed to the tax to do the tax submission. So whatever that you submit is actually together with the audited financial statement. So this profit before tax is actually audited figure, means that the figure has been verified. The items inside the SOCI has also been audited. Okay, so that's why sometimes when we do audit, we also look at sometimes when we do procedures, we also look at certain item that it is actually more for tax consideration, especially in the small firm or small medium firm. Okay. All right. So you will start with the profit before tax because this is the audited figure. So profit before tax, then you can have just one column, you plus all and then you minus all, whatever item that you want to adjust, or you can do similar like in the format which is plus column, minus column. Okay, so whichever that you prefer. As long as you know what you are doing. If you use single column, okay, you can also mix up plus minus, but if it is minus, you have to put bracket. That's all. So that's why I said you must know what you are doing. Okay, whichever format that you follow, whichever format that you are comfortable with. Okay, so we start with profit before tax. Profit is positive, right? And then, okay, the next one. So we start with item number 1, first line, sales. Sales, there is no note, therefore normally no adjustment, right? Okay, because it is sales related to business, because sometimes you might have note, therefore you have to take into consideration. Okay, the next one you have cost of sale, note number 1. Okay, note number 1, cost of goods sold. What happened is that 1 jihad to stock costing 10,000. The selling price was 12,000 and no records had been made. Okay, no record had been made. So meaning that now you have a stock costing of 10,000. Okay, however, been recorded, and then selling price is 12,000. So basically, you need to adjust for the stock. You also need to adjust, which is the cost and also the sales. Okay, you can do 2 times of adjustment. That means first you adjust at the cost of goods sold first, and then you adjust for the sales value. That is one approach. Another approach, shortcut approach. If you have cost selling of 12,000 at the cost of 10,000, therefore you have profit of 2,000. So in other words, the 2,000 profit have not been recorded. Okay, so whichever format or whichever approach that you use is acceptable. You can show, okay, stock unrecorded stock. So stock should reduce your profit, right? So you put here. And then you have unrecorded sales. Sales will increase your profit, right? So you put here. So at the end of the day, these two offset each other, isn't it? So that's why I just do once. Okay, I just do once, which is unrecorded profit. Okay, because you have sales of 12,000, you have stock of 20,000, so you have unrecorded profit of 2,000, which should increase your profit of 2,000. Okay, so you can do that. All right. So what's the reason or what's the justification here? Business
Drawing.
process has not been recorded. You can drawing now. Drawing to personal use. Stock costing, need to stock. You need to buat stock take.
Ulang balik madam, tak faham sangat.
Okay, it's like this One jihad to stock, okay, stock costing 10,000. Okay, the selling price was 12,000 and no records had been made. Okay, no records had been made. That means now, you said drawing, so withdrawal lah. Okay, so when you have withdrawal, so this is actually for personal consumption from another perspective. All right. Therefore, you have what is this? Stock withdraw 10,000 and then you have the selling price of 12,000. So here you would have a profit of 2,000 not being recorded. Okay, you have a profit of 2,000 not being recorded. So therefore, since it is unrecorded profit, okay, you put that as an unrecorded profit. And since it is related to profit not being recognized, therefore it is related to business process or business activity has not been recorded. Okay, so we just add on the 2,000 as an unrecorded profit. Okay, instead of doing the double entry for both cost of goods sold and also sales, just to offset each other and then we recognize that. Okay. All right. So that is for item number 1, note number 1. Okay, and then we move on for the gross profit. Okay, for the gross profit, no notes. So we move up further. Okay. And then note number 2. Note number 2, and then you have salary and wages. Okay, salary and wages, you have note number 2. So note number 2 refer to that. Okay, you have salary, bonus, and also EPF. Okay, when you have salary, bonus, and EPF, what you have to be, what you have to take into consideration is actually the EPF, because you know that EPF is the item that need to be careful because sometimes you have non-adjustment, especially when you have employer contribution at SIT 19%. Okay, so in reality, okay, when talking about EPF contribution, all right, in reality, contribution happen is like this. Okay, employee portion will contribute 11%, employer portion will contribute 12%. This is the normal practice. So in general, the minimum amount of EPF contribution will be 23%. Okay, 23%. So what happened is that, so here by right, minimum should be 23%. Okay, 23%. So what do you do? Maximum is 19%. So in other words, it should not exceed what? 11% plus 19% will be 30%, isn't it? Okay. So meaning, because here did not specify, is this employer portion or is this employee portion? Okay. So we assume this is for both EPF portion, employer and employee. Therefore, what do we do to test whether is there any of this EPF exceed the 19% amount? Therefore, what do? We take this 5,000 divide by total salary and bonus. Okay, total salary and bonus, which is 25%. 25% pula, 25,000. Okay, so 5,000 divided by 25,000, what do you get? 20%, right? Okay, so plus minus is still within the acceptable amount. Okay, acceptable range. Okay, so that means it is acceptable. So we do for all. Okay, so in exercise, whatever question you do for all, and then you check, is it exceed or not exceed? So if there is any amount that exceed, so the exceeded amount that will be adjusted inside your test score. So in this case, is there any adjustment required? Okay, if you compute for all the EPF, all within the allowable range, have not exceed the 30% range. Okay, if you take EPF divided by total salary and bonus. Okay, so no adjustment required for EPF. Okay, the next one, when you have salary, another one is what you have to look at would be disabled employee. Okay, disabled employee. Because disabled employee would trigger you for double deduction. Okay, double deduction. So this is actually to encourage the company to employ OKU people to work with them. All right, so that's why they have this disabled employee punya double deduction. So in this case, since you have disabled employee, right? So the whole gross remuneration will be deductible again. That means you would like to claim for double deductions. So what do we do here? You have disabled employee. Therefore, double deductions, right? Therefore, it will be deducted. So 9,000 plus 9,000 plus 1,000 will be 10,000. So just we put 10,000. Okay. So this will be why you deduct, because this is double deduction. Okay. Okay, next one, number 3, electricity, water, and telephone. For simplicity, Pondiha decided to apportion the bills according to the ratio 1 to 3 for personal and restaurant respectively. So what will happen is that a quarter of the utilities is actually for personal usage. Okay, so we know that under section 33, if it is related to personal usage, it is not deductible, right? Therefore, here you would have utilities. Okay, 1/4 multiplied by, what is the total utility here? Total utility is 12,000. Okay, therefore you have 3,000. It's actually non-deductible. Why non-deductible? It's a private expenses. Okay, number 4. Okay, the next one, number 4 is traveling expenses. Okay, traveling expenses include Puan Jiha's family trip to Langkawi. So is it deductible?
No.
Family trip, no deductible, right? Okay, why? Private. Okay, because they incur for personal usage. So add back. Transportation cost of bringing the employees daily to work, is it deductible?
Yes.
Transportation. Okay, sometimes question will ask you to do like this. If let's say no adjustment required, they will ask you to put nil. Okay, sometimes question did not say anything about this. So it depends on the question. If the question 1, then you put. Okay, if they mention, if the item no adjustment required for the non-adjusted item, you have to indicate, then you have to indicate like this. Just show nil. Okay, so depends on the question, because if the question requests, that means there are marks given for each item. Alright, because they want to know whether you know. Sometimes question only want those adjusted item only and also notes here. Okay, so you must be able to explain correctly, because sometimes you are correct, you add back, but here the explanation is wrong. Okay, so both sides must be correct. Okay, school bus fare for children, is it deductible?
No.
Oh,
Okay, for children, right? Personal or private usage, so 900 at back. Versus. Okay, the next one, number 5. Okay, the next one here, go back to the item by item. So here, number after traveling expenses, you have depreciation, no notes. But depreciation, is it deductible?
No.
Depreciation is not deductible because it is capital expenditure. So we need to add back. How much we need to add back? 10,800. Okay. 80 ringgit. Okay, and then after that you have insurance. Okay, the rest all got notes, right? Okay, then after that you have insurance. So insurance, life insurance for Puan Jiha, is it deductible? Okay, not deductible. Life insurance, personal usage, not deductible. Therefore, we add back. Again, it is private expenses. Fire insurance for restaurant, is it deductible?
Yes.
Yes, deductible. So no adjustment required. Educational insurance for son, is it deductible?
No.
Not deductible. So plus back 1,200. Expenses. Okay, party for the opening of the restaurant. Is it deductible? Okay, when talking about entertainment, okay, for those who have textbook, kindly open to page 258. Okay, so because in general, entertainment is actually non-deductible. Okay, in general, income tax will always say entertainment is actually non-deductible, fall under section 39. However, there are some entertainment are allowed from section 39. Okay, so if you refer to para 17.9, okay, of course, entertainment in general, we are talking, because entertainment you might incur for employee, you might incur for supplier, you might incur for your, what is this, client. Client can be your existing client, it can be your potential client. Okay, so that's why normally income tax will apply general where entertainment is actually non-allowable. Okay, so that's why if you refer to PR Public Ruling 4/2015, okay, it does mention that now under the general definition of entertainment expenses, if you did not specify specifically entertainment for what and so on, okay, the whole amount will only get 50% deductibility. Okay, so if you have 1,000, only 500 will be automatically deducted. Okay, unless you specify. Then if you specify, then you have to cater each and individual. Okay, so that is the general rule. All right. However, if you refer to page 259, there are also exceptions given, meaning there are certain situations where entertainment expenses can be deducted in full. That means in the whole amount that incurred. Okay, for instance, item number A, okay, entertainment provided for employees. All right, provision entertainment to employees is deductible except where provision is incidental to other terms. Okay, so as such, okay, expenses incurred free meals, refreshment, and no dinner gift for employees normally will be deductible. So in general, if you incurred any entertainment expenses for employee alone during that occasion, normally the whole amount will be deductible because we consider that as a staff welfare. You treat your staff. Okay. However, there are certain circumstances whereby sometimes you have lunch, buffet, you have dinner, okay, where you include or you invite employee plus client. Okay, so in this situation, therefore, only 50% is deductible. So that's why when you have entertainment, okay, please make sure that you read through all this para 17.9. There's a lengthy information or description about how to treat entertainment, okay? Because sometimes you have a promotion, okay? Because under entertainment, sometimes you also fall promotion like gift during trade fair, okay? Or sometimes you do the remember sometimes when you buy something, you buy Colgate, you get free towel, okay? So is that the cost of having that towel to get the towel ready for the free item? It's also costly for the business, okay? It's also considered as part of the cost of the business. So would that cost of the towel will be included as part of promotion expenses or not? Okay, so that's why there are some clause mentioned, okay, in order for the cost of that towel to be included. For instance, if you want to get the cost of the towel to be deductible, you must make sure that you put logo on that towel. That's why sometimes when you get free item, you can see there are logo or brand of that particular product on those free item. Okay, similar like when you ask for goodies bag. Okay, you ask for because students always ask for sponsor, right? Okay, then they give you small packet whatsoever as a goodies bag. So this is also part of the promotion expenses. Okay, and sometimes company put under entertainment. So all these item or clause are actually mentioned under PR 4/2015 with regard to entertainment. Okay, so you are actually expected to know how to treat entertainment expenses under certain circumstances specifically. Okay, so over here you please read page 259, 258, 259, 260, which actually indicate how to treat for entertainment expenses under specific conditions. Okay, so once you read through, you actually can get the general rule. If it is related to employee, normally it will be deductible in full. However, if it is related to client, then you will get 50% discount. Okay, and of course, if you go for cultural sporting event, okay, promotion, then normally the logo is actually required. Okay, but please go through read these particular pages. All right, okay, coming back here. Here entertainment, they do party, okay, party, but however, it is for the opening of the restaurant. So opening is actually a trigger point where it is actually an initial expenditure. Okay, it is an initial expenditure. So if you refer to your textbook, there is one part, initial expenditure page. The criteria or acid test for expenses. Page 239. All right, so sometimes you also have to be careful when you have initial expenditure. Because normally, from test point of view, any initial expenditure will be treated as a non-allowable. Okay, non-allowable, therefore it will be add back. Okay, all right. So in this case, since the entertainment is a party for opening of the restaurant, it is considered as initial expenditure. Therefore, it is actually considered as a non-deductible. Okay, so that's why you have to look at from every angle actually when you have item. Okay, why it is not deductible. So that's why explanation in the notes is actually very important. Okay, so that's about the first item. Second item, Hari Raya gathering for staff and family. So for staff and family, normally is staff welfare, right? Okay, like family day. Okay, because sometimes company do family day, family trip. Okay, where they go outside over the weekend, they stay in the hotel and then they pay all the traveling, they pay for all the food. This is all also considered as a deductible. Okay, all right. So normally whatever related to the staff normally will be deductible, because it's fall under the concept of staff welfare. Okay, then next one, daughter's birthday party. Of course, this is personal expenses, isn't it? So birthday party will be non-deductible at that 500. So this is actually under private expenses. Okay, so entertainment, please go through because there are specific conditions that you have to take into consideration. Okay, the next item will be bad debts and doubtful debts. Okay, this one relate back to what you have learned in accounting. You have bad debts, which is a confirmed debt that cannot be collected. Doubtful debt is something that you make a provision or you make allowance for that because you still have a tendency can be collected or cannot be collected. Okay, all right. Let's look at the first one. When we're talking about bad debts, okay, in order it to be recognized as a deductible item, you must fulfill several criteria. It's also mentioned in your textbook. For instance, first you have receivable. Okay, once you have receivable, that is when you have incurred your first time of sales. So you recognize that as your receivable. Then after a while, you notice that your receivable cannot be collected. Therefore, you recognize that as your allowance for doubtful debts. Okay, you recognize that as your allowance for doubtful debts. Okay, so then the next step will be bad debts. So from doubtful debts to bad debts, normally you have to do some procedure in order to recognize or to authorize that debt as a bad debt. You cannot simply write off. Okay, you cannot simply write off. Normally it should be authorized. So in order to be authorized, normally in business, they will have already done something, such as they send first reminder, second reminder, they get lawyers to look after all this receivable. So they have done some works in order to or try to collect the debts. Then only they can go for bad debts. Okay, then from tax point of view, then only it can be deductible. Okay, so that is one. Another one, of course, it must be related to trade. Okay, because you might have bad debt which is not related to trade. For instance, like here, advance. Okay, this one advance you give to your employee. Okay, you give to employee which considered bad. That means you give advance to Abdullah, Abdullah cannot pay, and then cabut lari, notice 24 hours, you not pay. So it's a loss to the company. But is it trade activity? No, it is non-trade activity. Okay, so bad debts written off. Of course, this is a business loss, only allowable if it is a trade. Okay, only allowable if it is a trade related. If it is a non-trade, therefore it is non-allowable. Okay, so bad debts if it is a trade, therefore it is allowable. However, bad debts which is non-trade, therefore it is non-allowable. So you add back 400. Okay, so that is the story of bad debts. Okay, next one we move on to doubtful debts. Okay, doubtful debts, when talking about provision, we have general and specific provision. Okay, we have general or specific provision, or in your case, perhaps you learn the words of allowance. Allowance for doubtful debt, sama lah tu. Okay, alright. Allowance for doubtful debt, what's the difference general and specific? Okay, what's the difference general and specific? Okay, general is when you want to do allowance, general allowance, what happens is that you take percentage of on overall debts or account receivable amount. Okay, for instance, let's say you know your total receivable is 1 million. And you assume based on the historical pattern, 1% cannot be collected. So 1 million, 1% from 1 million will be how much?
10,000.
10,000, So you make provision 10,000. Okay, you make provision 10,000. Do you know specific debtors that you want to, it is doubtful? No, alright, you don't know. So you take as a broad in nature. So that is general provision. Specific provision is when you identify specific client which are doubtful. Okay, you specify, you can identify. That means you go through your, or some company, what they will do, they will go through their aging receivable. Okay, identify which one cannot be collected for sure. Let's say ABC, they know bankrupt, so cannot be collected. So they take out that one as a specific provision. That means the whole amount of ABC will be recognized as a doubtful first. Okay, and then they move on further, look for another company and so on. So they take the whole total receivable minus all this specific provision. Then only they provide general provision. Okay, so specific means you know specific clients that you provide for doubtful. Okay, you know that these are the doubtful debts. General, no, you don't know. So those are the difference between general and specific. Okay, so how do you want to make adjustment? You have to know the nature of the amount, what is actually transaction that happened with regard to the provision for doubtful debts. Okay, you learn in accounting when you have general provision, there are circumstances where you would have increase in provision or decrease in provision. Yes or no? Okay, there are years where you have increase in provision, doubtful debts, 1,000. So you make adjustment. Or sometimes you might have decrease in provision for doubtful debt. So from year to year, the amount might differ. So you have to know what will be the double entry for each occasion. If you have increase in provision, okay, if you have increase in provision, normally you will debit your P&L, you will credit your provision account. Okay, you will debit your P&L, you will credit your provision account because it is actually similar to the normal expenses, is a loss. Okay, therefore, when you want to make adjustment for the tax purpose, because it is non-deductible, it is a non-cash item, because it's just a mere book entry. So how do we adjust? Okay, we will add back because when it is increased, it is on the debit side of the P&L. Therefore, in order to derive to the profit, it has been deducted. Then if you want to adjust because it is non-deductible, we will have to add back. So the reverse situation would happen. If you have decrease in provision, what will be the double entry? You will debit your provision account, credit your P&L. So it will appear on your credit side. So it has actually increased your profit. So if you want to make adjustment, you would have to reduce, minus. Okay, you have to reduce or minus in the adjustment. Okay, so that is the treatment for general provision for doubtful debts if you have any. So in this case, for trade bad debts, normally no adjustment. For non-trade bad debts, you have to make adjustment. Okay, because it is non-business related. All right, not to produce business income. And then for the provision only, make adjustment for general. However, you have to know, is it increase or decrease in provision? Okay, so if it is in this case silent, so we assume this is actually increase in provision. Okay, therefore, how do you adjust? So here you would have provision for doubtful debts. Okay, so we add back, right? Okay, why we add back? Because it is non-cash item. Why non-cash item? Because what do? We just book, calculate, estimate, and then we do the double entry, debit, credit. Okay, so there is no outflow or inflow of money. Right, so that's why it's mentioned as non-cash item. Okay. Right, move on. Number 8, donation. Okay, donation normally donation and fees. Okay, fees here for trade association. Of course, this one related to the business, right? Okay, for you to do business, you have to be member of trade association. So it's a related to the business to produce business income, therefore it is deductible. However, donation, what do? We adjust. Okay, donation, we adjust. Why we adjust? Both we adjust. Why we adjust? Because it will be less after aggregate income. Okay, it will be less after aggregate income. It's not less at the profit loss. Okay, so you have to remove it out. So 500. However, here, which one can be less at the aggregate income? Only approved donation. Political donation, no, not allowable. Okay, the next one, motor vehicle expenses. Okay, motor vehicle expenses, you have 3,000 of the traffic offences. Okay, traffic offences, is it deductible? Traffic offences, basically whatever related to violation of law. Okay, violation of law, automatically it will be non-deductible. So 3,000 will be at back. Motor vehicle maintenance charges consists of repairs, spare part, insurance, road tax for company vehicle. So it is for business related, right? All right, therefore this one will be deductible. And then the balance 20,000 is in respect of purchase of a small second-hand car for business use. Is it deductible? Of course, for business use, it will be deductible, isn't it? However, they purchase a car. Okay, they purchase a car. Therefore, car is what? Car is an asset which carry enduring long-term over a long period of benefits. So it is actually capital expenditure. All right, therefore, second-hand car, it will be at back. Okay, why? Because this is capital expenditure. Right? And then move on, general expenses all for business use, and then personal tax probably amounted to 2,000. So basically, personal tax is being paid by the company, right? So this is personal expenses. So add back. For private usage. Okay? So once you have gone through all the notes, normally my advice, you go back to the Sochi, you go back all the item. Is there any item without the note numbering that are still needed to be adjusted? Okay, but in this case, you only have depreciation, therefore you are already included, then it's fine. Okay, but some question, you might have other item which is also need adjustment. So that's why be careful. Okay, so basically we are done here. So okay. So that is actually how you compute your adjusted business income. So you can do these two columns or you just do one column. So let's say if you do one column, this one you can just put here, but here you must show negative. But that's also another way, right? So again, that's why I say it's up to you, but you have to know which method you are doing and how to do it, to approach it. All right. So that's all for this question. Okay, any question? Okay, any question? Any question? Oh, senyap je. Ke tidur je semua dah ni? Okay. So basically that's all about donation political parties not related to government body tak? Tidak. Because sometimes it can be opposition. So whatever it is, it must be approved institution. Approved institution is as per the list of approved institution that because normally on the receipt you would have, it would state section 44. Okay, section 44, therefore you get exemption and so on, so on. So they actually have to apply to income tax for every donation to be exempted. So and then that clause must appear on the receipt. Then only as a donor you can actually claim that as a approved institution. One example is UIA. Okay, one example is UIA where if you contribute or if you donate, then you can actually get that exemption. What's this? Approved donation. Okay, so you must have that receipt. Okay. Okay, question. Why does Pondia receive salary too, even though? Okay. Oh, salary have to add back. Okay, Adila. Your question, Madam, why does Ponjiha receive salary too, even though she owns the restaurant, which is common for business owner, for enterprise, okay? Normally, in order for them to, because they also need money for living, right? Okay, so to make it better for formality and so on, normally they will receive salary from their own business. So what they will do is that they will actually receive salary as normal, all right, and then in the computation, by right, that salary should be added back, right? Because it's considered as a private expenses. Okay, so later I amend that part. Okay, so the salary will be added back, and that salary will be included under section 13(1)(a) later on. Okay. Madam, donation to political party is not related to government body? No, definitely no. All right, because political